out at the cottage, that beautiful lake, and I had to build a new path down to the beach, and so I was digging, and I have insane calluses today. It's cuts. I fell into the, you can see that, but I fell into the thorn bushes. My arms are all destroyed. Got cuts and bleeding everywhere, so that was a lot of fun today. And yeah, a little day's hard work, and it's like, man, I'm reminded about just how hard it is working every day. Like, I put in back-breaking work. I was lifting heavy rocks, I was digging, I was cutting, I was climbing up and down 200 stairs up and down, which was a fantastic workout, by the way. I got like I'm feeling the pump today. There's just, you guys can see that. I don't know if the camera can see that, but I got my pump on today. Let's go. So that was a free workout. So happy about that. But reminded about how important it is to risk manage. And someone says, Carvana, would you sell us 7 times? Oops, what did I do there? I don't know what I did there. Sorry. I am shorting Carvana a little bit, defined spread on that, actually on that stock. But again, don't do as I do. It is being short squeezed, and we have no idea what the top would be. So I would go a ways out, go a couple months out, look for a good risk premium. And if you feel like you want to take that risk on, I feel like there's probably a pretty good chance that that squeeze eventually ends and the stock falls back down to like $20 a share. It's like Newegg, which again went $70 to $1. It eventually will happen. We don't know when. It's hard to time that. But yeah, interesting. Today, the Tesla earnings were very bad, down 5% almost today. Then it's crashing the Nasdaq. I think the Nasdaq's down 1% almost after hours today. So it's washing out from its new highs that it also found yesterday and this morning. And so that's great, actually, for me, because I'm still short. I'm not near as short as I was. I turned some of that short off today because, again, I was just so busy with the family here at the cottage, and I wanted to get some work done, and I had no cell service down there, and I didn't want to be worried about checking it. So for me, even though I don't have to worry about checking it, it's easier for me just to pause and put it back on later. But what I know is this. I know that it's very difficult to beat the market, and there are a select few people in the world who over a long period of time can out-trade the indexes. And so don't try. Buy the indexes, hold them. For me, I like my money in real estate. I like to be able to touch it, feel it. I like to be in control of the outcome. If real estate crashes and I have strong cash flow, I don't care. I'm not checking the price of my houses, but I'm glued to my phone checking the Nasdaq, the QQQ, seeing where the price action is. And I get glued to that, and it's an emotional roller coaster that I don't have in real estate. And my personality type is very much, one of those types of all or none. Like, I go all in on my businesses. I don't like to fail. That stubbornness or that determination doesn't necessarily make me a good trader. Being able to walk away makes you a good trader. And to put in more time, you don't get a better result sometimes. But in real estate, you put in more time, you will get a better result. You work hard enough, you will win. If you fail at real estate, it's 100% because you suck. You didn't put the effort in. You were too lazy to get up and, put good tenants in, or do the extra showings to get the right tenant, or, some people pick the first tenants that come along, or in renovations, if you're doing flips, a lot of people don't cost control. They're like, I don't want to argue with that contractor, but that's what you have to do. That's part of being a good business person in that business. So if you're watching this right now and you're like, that's maybe not me, maybe real estate isn't for you, and that's okay. Maybe you're a better trader. Maybe you have the discipline to cut when things are down and to make those hard decisions. And maybe that emotional roller coaster doesn't bother you at all. And maybe you can make good trades and you're a good trader. I don't know. Even those people who are dispositioned to do well as traders, most of them lose to the index over the long term. So just the data says you'll probably fail at that. Whereas in real estate, if you work hard and you put in a lot of hours, you work smart, you work hard, you find really cost-effective ways to solve problems, you're on top of things, you project manage, you micro your projects enough, you will win no matter what, even in a down, declining market in real estate. Even if you buy at the top, in 5-10 years, if you manage it well and you bought the right kind of property with strong cash flow and strong lift, you don't care about how the price of the property goes in the short term, because in the long term, you're gonna always win. So something to think about. We have been testing the Nasdaq tops, and people are asking me, like, where do you think the top is? I'm like, I don't know. I think it's very possible we test the all-time highs of the Nasdaq in 2021, December, we hit the all-time highs. I think it's possible we test that again. Many companies like Apple have already passed their all-time highs ever. NVIDIA, like lots of companies on the Nasdaq have pushed into highs they've never been at before. So to me, it's frothy when you have a 250 price to earnings ratio. So it would take 250 years of current earnings just to get your money back and make no profit. The only way out and to make money buying at those levels is to bet or to speculate or to gamble that a number of growth targets will be hit consecutively, quarter after quarter, for the next 5 to 10 years for companies like NVIDIA. Those over deliveries have to happen every single quarter, and none of them can miss, and no competitors can come in and eat their lunch, and nothing can change in the, like, it's like rose-colored glasses when they're valuing these companies, and they're using discount rates and hurdle rates that are, you know, assuming a 2% rate of inflation again and a 2% interest rate, which I don't know that will happen. I mean, there's a really good probability now that gas on the 1 year and on inflation, the new August report's going to show gas was low last August and is still relatively the same. That 30% drop in gas was helping us get a 3%, you know, headline inflation. Now, real core is closer to 4.5. I think it's very possible that, you know, base effects lead us to, on the monthly averages, a place of like 5 to 6% ending the year for inflation. That's reasonable. That's us beating inflation, by the way. Another real possible scenario is they continue to raise rates. You know, in a couple weeks, we're going to get end of July here, where the Fed's could probably hike another 25 basis points. They've signaled that they would do that. There's like an 80 or 90% probability they would do that. They'll probably do it. And there's a risk that if they keep doing that, that shit breaks. And you're not seeing it yet. There's a lot of people I know, they're like, oh man, my mortgage went up like $2,000 a month. Like, no big deal, I'm fine. I have lines of credits. I have, you know, credit cards. Oh, I got a raise at work or whatever. But like, contraction starts to set in. Look at the jobs report. 80% of new jobs being created right now that make the economy look great were government funded. In construction, public sector work. If you actually pull out the jobs, it's almost all government stimulus. So private sector is suffering and pain is coming. And I say that with a smile, but I shouldn't. It's because for the longest time, to me, the writing has been on the wall that the Nasdaq shouldn't rally 46% year to date. Like almost a 50% rip up in 6 months. And things have not changed dramatically. And there's a lot of pain potentially still to come. I think people are getting a little too excited a little too soon. I think there will be a good opportunity to average dollar cost average into the indexes. And I think that will come probably this fall. We need 1 to 2 rough inflation reports, which hopefully, for me, on the backs of, you know, the stimulus and the spending that's going on this summer, people are spending like crazy. And I think that's going to impact the next couple of inflation reports that were saved in large part by the fact that last June, gas prices were like 35% higher than they are now. And so that affected everything and drove the prices way up. And so it looks really good compared to where it was. But when you start comparing August of last year to August now, it's not so great. We still have 9% food inflation. We still have, you know, housing inflation. We still have major core inflation issues that exist right now. And we need to see the terminal rate higher than the core. The core is really what matters, than the core inflation, not headline. Core inflation is higher than headline right now. And we need to see that for a long time. There is one risk that they tighten too much and we get deflation, which is great for the people in the short term, but just destroys, like, the Nasdaq would just die. People will go crazy. Deflation is like you get rid of your cash as fast as you can because it's actually losing value. Instead of inflating, it's deflating. So anyone with cash is like, oh my God, like I gotta do something with that. I gotta park it somewhere. And then everyone's afraid to park it in assets because during deflationary times, it can be crazy. So that's one possible scenario. I think it's a tail risk. I think it's not likely. I think the more likely scenario is we get a couple of bad resurgences on inflation. And then the Fed has to talk dirty to us again. And that creates a cycle of fear. And through that cycle of fear, I'm going to unload my short and probably just buy the indexes and not look at it. Where the bottom is going to be hard to call. I don't know. Will we test the bottoms we saw in January? Could happen. Probably not. But, you know, there's some real catalyst risks. Russia just came out and blockaded the Ukrainian breadbasket of the world, right? So that is going to lead to more food inflation in the coming months. OPEC's trying to squeeze oil prices up by cutting supply. Both Russia and even the US dollar right now is losing it's being dethroned as BRIC, Brazil, Russia, India, China, and a number of other, Saudi Arabia, a number of other countries are coming together and creating their own gold-backed currency and not using the petrodollar, the US dollar, to transact. And so that's going to have effects. China, potentially, tensions between US and China are elevated more than they've ever been. There are so many catalysts, and all we need is one spark. And so to me, it's like, do you short right now? I don't know. We're at all-time highs. Could we go higher this year? Maybe. I mean, we're at like the 387 on the Nasdaq. That was insane. I think we could see some retracement even in the healthiest of bull markets, but I see a pullback. So my thought is pullback. Real estate, let's talk real estate for a sec here. It's quiet. All's quiet on the Ontario front. There are not a lot of offers. Days on market are growing. Fear is building. The last rate hike we just got in Canada put prime at, I think, 7.25 almost. Most HELOCs right now are like 7.75, almost 8%. Most people's personal lines of credit are double digits. You're seeing a lot of personal lines of credits at 10, 11, 12, 14% when they used to be 6. So when you take someone from 6 to 14 on that renovation they were told to put on their line of credit. Literally, there's a quote of Trudeau going out in 2021 and being like, spend money, we need to stimulate, we're coming out of COVID, it's, put that money in your line of credit, we promise rates will be low. Like, that's a good use of credit. He has a quote of our Prime Minister saying that, and also our Minister of Finance. So we were encouraged to lever up, and we did. Canadians are very levered, and US citizens are also very levered. Credit card debt is well over $1 trillion now, and it's growing actually at 18% annualized, so people aren't paying it down. It's just growing by the rate of the interest rate on those cards. So, and even some of them are at 22%, 24% now. So it's craziness out there. And there is a real, and I wouldn't even call it a tail risk. Like, it's more than a flip of a coin likely that we hit a recession. And it could be dirty and big. And so just prepare, guys. Have some cash on the sidelines. I think it's a good time to buy real estate, just because there's so little, especially in Ontario, there's so little buyer pool. So few people right now are offering. And so if you're out there throwing offers, you might be the only one. You might be able to offer 20% under asking price and get it. So this is not a good time to sell, but it is a good time to buy potentially into this winter. I think we'll see this December, January, I think we'll see the low in Ontario. It will test new lows again. Potentially, like, again, not that much low. We had a 10% rip up from January to the spring heat of like end of May. So we're going to lose probably that 10% we got. It's not like we're going to lose. The world's not going to correct in a major way. Again, because of, I've said this at length on my Instagram channel when I shared on there, and I now have a threads thing, which like I don't even use, but I did make a couple posts, and it's like, the government makes it so hard in Canada to build. Like, the amount of fees and regulation and red tape, it takes years, like sometimes 3 to 5 years before you can even develop and add units. And they're taking in 1 million, we took over 1 million immigrants in last year. So when we're growing at $1 million, 1 million people a year, and we're creating a couple 100,000 inventory, there's a huge supply demand imbalance. And irregardless of how crazy rates get and how few Canadians can actually afford, someone will come in and scoop it up. 3 Indian families who just moved here might share $1 million house in Toronto. That's 300,000 per family. It's very common. Multiple families living together. That's a new trend. People like and Ontario is now blessed that. So you're allowed to have an accessory dwelling unit in your backyard, a lane house. You're allowed to build a detached unit now legally, and everyone in Ontario, that's coming. You're allowed to have duplex, triplex now in any house, anywhere in Ontario, regardless of zoning. They cannot stop you. You can add units. So that's a sign that the government in Ontario is worried. They're like, hey, we're getting a large lion's share of the immigrants here in Ontario, and we don't have enough housing to house people. So there is that supply-demand imbalance, which makes it hard for residential, small-time single-family, for that type of property to really fall. Now, commercial stuff like office, retail, that stuff's going to tank. Like, why would you buy a 3-cap mall at 7.5% to 9% interest? It makes no sense. Locked in for 5 years. You want to lose money for the next 5 years? Like, there's just very few projects that make sense. There are some that still make sense, but it's going to be a difficult space, I think, to exit. And the refis aren't going to be there in the same way that they were. So that'll be a space that might be hit a little harder, is the commercial real estate stuff. But the residential, I think, though it might fall like 10%, I mean, does it really matter? Is 10% a huge amount? Is it enough to stop you from buying a strong cash flowing deal if you can buy it 20 cents on the dollar, 20 cents off on the dollar, so 80% of its value? No, go and buy that project, right? But if you're going to pay full retail, there's no value add, turnkey, I mean, maybe be a little careful in these times, because we may be going into some turbulent times where there might be a little bit of a pullback. And if you're relying on speculation and not on cash flow, it might not go so well. So that's where I'd say, just be careful, guys. Just be careful. All right, Q&A time. Hey Blair, how you doing? Question for you. How do you be tough on contractors for them to finish on date and time? So Dominic, in general, I would say contractors never finish on time. They never finish on budget. So that's just like the reality of, humans wishful thinking. They think that they can get things done faster and better than they can, and they don't. How do I put this? Like, part of good project management, and that's if you own a property and you're trying to manage the renovation or the contractor, you're a project manager. And so one of the things that people don't do, which you should, is have an Excel spreadsheet where you can track when each trade is coming in with a date and time and a calendar beside that. So you can map out when this person's done, do I have this person lined up? And so 2 weeks out, you can think to yourself, have I gotten the 3 quotes for the taper? Because this person's gonna be done in 2 weeks. And so it's playing with that. And then of course, no one ever hits their deadline. So it's constantly juggling and playing with that. And there's a lot of messaging and back and forth to keep your costs, in line. You need to be getting multiple quotes. And it's a lot of work. I mean, you could be bringing in 20 sub-trades to do it cost effectively. You could just pay one guy to do all of it and it's easier and it's fine, but your budget will bloat. So just be careful of that, I guess, so to speak, Dominic. But next part of your question was, how do you balance love life and working a lot? What do you tell her to make her understand? So it helps that in the beginning, Elise always wanted me to be home, but in the beginning, she was more understanding because I sold her on, hey, I'm obsessed. And like, I found this at 17, we'd already been dating. So she saw me go from like, this is what I want for my life. And she's like, I'm on board with that, the nice house and the awesome life, to like, instead of that, why don't we have that later and sacrifice a little bit right now, where we don't have as nice things now, but later on our life's going to be amazing. So we're not going to go on any trips. Our friends are all going to Europe and having those, university trips, and they're all, having a good time at the bar. It's like, we're not going to do any of that. We're just going to save and be super frugal and stay in. And that'll allow us to bloom later, because every dollar we saved at 17, 18, 19 years old is worth 10x when you're in your 30s, right? And it's 100x when you're in your 60s. So it's small delayed gratification early on and making those conscious decisions to sacrifice a little bit. But it really is like anchoring on the goal. Right? If you want to motivate someone to do something, you either have carrot or stick. And I employed both. This might be like psychological warfare. I don't know what you call it, like manipulation, but like I applied both. And so the carrot was like, I know you want to have kids, and like she wanted to have kids. And I was like, you want to have kids younger? If we hunker down for the next 7 years and I work really hard, like I'm going to work 8 to 5, I'm going to get home from work and then I'm going to work again, another job. So I'm working like 80, 90 hours a week on my business, my real estate stuff, and I'm gonna be doing the housing stuff. And I expect your help in this too. And we'll be allied on this mission. You can not have to work when we have kids. You can be free to not work the rest of your life. And that was enough. Like, I think the carrot helped a lot on that. The stick I had to bring out occasionally too, like especially when family gets involved, like Elise's and mine too, aunts and uncles and parents and things are like, this is the wrong path, don't do this, you're too cheap, this and that. Like, people are going to discourage you, right? Because they didn't have success in their life. And so they're going to project and they're going to try to undermine you. And it's weird. Like, you'd think that your loved ones and your family actually want success for you, but a lot of the time they have their own insecurities and they're trying to actually undermine you in a lot of ways. And you think about, you take advice from someone who hasn't had the success that you want in your life. Why would you take advice from that person? Like, if the aunt is 50 years old and still working and doesn't have financial independence, why would you take advice on financial independence from them? Obviously, they didn't know what they were doing, and they don't know what they're doing. So that was a big piece of it, was like, ignoring that. And the stick piece is really about like, I said this, like, I'm on this mission. If you're not on it with me, that's okay. I'm going to keep going alone on this path. And so for me, like, I actually did say that probably at least once. And that's the stick part of it. It's like, if they're not the right partner for you, okay. It's not everyone's the right partner for you. That's okay. So the carrot is, the reward is there. If you want delay gratification, we're going to live like kings later, king and queen later, but there's going to be sacrifice. And hopefully the carrot's enough, but it may be the stick. Maybe that person isn't right for you. They just want you to hang out on the couch and like, they're demotivating you to do things with your life. That she might not be the right one, right? She wants to go out and party with you every weekend or whatever. She might not be helping you achieve your goals. She might actually be holding you back. And having a spouse that's on board is super important to that goal, I would say. At least, at a minimum, they have to be supportive. They don't have to be involved in your success. Ideally, they are involved in your business in some way, but they at least have to be supportive of it. And my wife is super supportive. If I said tomorrow we're moving to the Bahamas, she would go with me. She 100% puts her faith and trust in me. And that is a responsibility that I don't carry lightly. Like, that weight on my shoulders is why I have to risk manage. As an example, I've cut a good portion of, there are parts of me that wanted to put everything I had into that Nasdaq short. And I didn't. I still have 13 active projects in real estate in Canada, and I still have an active, thriving lending business in Canada. And I've spread my chips around. I still have crypto, and I still have some gold and silver and several other things because my family's relying on me. And that's a burden that, as a man, if you're going to take that role, and this might be sexist or whatever, but like as the head of the family, like I am the income producer. I make 20x what my wife can make an hour, maybe 100 times what she can make an hour. So like, it just doesn't make sense for her to work. It makes sense for her to support me and support our family. And she does a great job at that. And there's no way I could put a price on that. But if she had to go out in the marketplace and earn income, and I had to go out in the marketplace and earn income, I can coach at $500 to $1,000 an hour. I can go to real estate projects and make $5,000 an hour. I could dig this embankment today and make $2,000. I actually saved like $2,000, which is a horrible, if I think about it, like let's say I spent 10 hours doing it, 10 hours of backbreaking labor to say that's like a couple $100 an hour. And the reason it saves so much is because you need someone there to like strategize. And I was doing all three roles. I was doing the planning, the design, I did all of it. And the labor part, if I just had a $15 an hour lackey, it would have made it go faster. Probably could have done it in like 6 hours. But the time to coordinate all of that. And I look at it as like, I got a free workout today. So like, I'm super pumped right now. I'm like super hard. So I'll take that as a free workout. Now I don't have to work out. So yeah, anyway, back to the Q&A. You guys have never asked that question before. I actually like that, Dominic, because I don't think I've ever gone into that rabbit hole about, relationship advice and financial independence and how being a successful entrepreneur and in life is so important, who you surround yourself with, and who more important than your ride or die, your right hand. So yeah, it's important, very important. Sorry, my hair is crazy, guys. I literally was like all day down there and just jumped in, quick bath, just to like soak all the poison ivy, whatever was on me, probably dirt. So yeah, I'm a little ratty right now. Well, it says, nice to see you enjoying the cottage. Great weather. Oh, it's beautiful weather today. I might go down for a swim tonight. The water's looking just crisp today. It's beautiful blue, crisp water. Hey, Joseph, how you doing? This time, Mike, hope you and the family are well. Wanted to ask your thoughts of the markets you're investing in Florida have been declining in prices or staying strong. Florida is relatively flat, interestingly. It hasn't had, quite the fall. A lot of that is because, like, I think not even just immigration, but just like migration between states. People have been flocking from blue states like California and fleeing to like Vegas, Arizona, Florida, Texas, as I think probably Florida's in at least the top 2 on most of the lists that I've seen. So a lot of the cities are anyway. So there's a lot of people coming in. Again, difficult to also build there. So prices have been okay. In some areas, like some of the areas I invest, we have seen a 5 or 10% pullback on the 1 year. It's minor, right? Like if the house is going to be worth 500, it's now worth like 460. Like, is it going to really break anything? Over a 5-year period, you're going to win in a big way. So if you can hold, you should. Part of the reason why I sell and why I'm putting some of them up for sale is like, it's better to have gunpowder to buy more deals at the bottom because I have that selective advantage. Like the thing that I'm good at is finding opportunity. And so whenever I sell something, a lot of people are like, well, I can't find another opportunity that's better than if I sold my property at this low market. What would I buy? Something else in the MLS? And it's like, well, then maybe it doesn't make sense to sell because then you have all this transaction fees and all this stuff. And you're just going to buy something else anyway. It doesn't make sense. But if you can find a really good opportunity, then you're shifting capital from top ARV into a new deal that's at a lower, percentage to ARV. You get a lift there. And that can be what you'd call velocity of capital, a faster velocity of capital. You would grow your money faster. And that can be powerful, potentially. So don't panic sell. But my advice typically is just hold if you can. If you do see a really great opportunity and you've picked that opportunity out, it can make sense. Sometimes strategically, it can make sense too, just to have that reset as well, I find. Bum, bum, bum. How to. Greetings, Mr. Rosehart. Greetings. Nathan says, such sound advice. Thank you. Yeah, I agree. It's important to pick the right partners and to get on the same mindset, wavelength. D. How to says, this is sound relationship advice. I'd like to find a wife who is like me with your wife. It's 117 degrees Fahrenheit where I am right now. Wow. I heard we're getting some of the hottest days on record, which is crazy. I don't know how I feel about global warming and all that, but that is some wild record being set. In some ways, it's actually good for places like Canada to have less severe winters and really nice warm. Like doesn't get crazy hot here usually. Do you still have your short position? Yes, I do. It is still there. Yeah, I'm not as short as I was because again I took today off, but I will probably re-engage if I see some confirmation that we retrace down to 370s. I'll probably add more to that. So, Inabiz says, "What do you think about Cleveland, Ohio, as a market to invest?" Thank you. I don't know a ton about Cleveland, Ohio. I knew a few people who invested in Cleveland and said good things and said the cash flow was good and price to rent was decent, but I haven't done a deep dive into the market, so I can't confirm. What I would say is if you're looking to any market, try to look for your rent to price and try to look for, like with Airbnb, I try to generate 20% of the price of the house every year in top line revenue, minimum. Ideally, like 25% would be better. That's like a target. If you're doing like rental, I would say 1% rule. So if it's a $300,000 property, $3,000 a month in rent is kind of ideal. As you get higher on the price point, you can go a little lower because your margin you're still gonna get a good return. So if it's like a $600,000 house, potentially like $4,000 or $5,000 a month is pretty good. From a rental perspective, you make good cash flow on that still, even in this interest rate environment. Ideally, you can do vendor financing. So if you can find deals that are vendor financed, that's a huge win because then you don't care about what rates you're doing because by the time your term expires, you can go get a nice, cheap mortgage. So yeah, that's my advice on that. Yeah, wow, I got through all the questions quick. Nice. I guess I'm gonna end the stream a little early tonight. What else could I sum this up with? I would say, if you guys are out there and you're struggling right now, have faith, hang in there. I know a lot of people are suffering in this recession. They're feeling the effects of things. If you're a tech investor, you're up 100% right now, take some profits. If you're a crypto investor, you just made 70, 80%, maybe take a little bit of profits. All my NVIDIA shareholders and Tesla people who are, just ripping it, don't forget to take some profits. The market doesn't rip up like it has forever. It has its pullbacks and there might be a chance to get back in later at a better price. So I would just say in general, de-risk if you can. If you can pull some cash off, there's going to be really great opportunities and a lack of liquidity, I think, in the coming 6 to 12 months. So if you can get a little bit of liquidity, it's good to have. Recommendations for Canadian ETF, crypto, and TFSA. So I think I hold in my TFSA, what do I have in mind? I have like a grayscale or something. A grayscale ETF, I think it is. It's not actually spot, but it mimics the price of ETH and Bitcoin. And it's a shame because it's way down right now. And I put it in last year towards the top and I'm gonna let that ride. I think I have like maybe 150 grand in that in Bitcoin and ETH. So we'll see how that rides out. It's tax free, so whatever happens, happens. Boom, boom. Mason says, been supplying senior housing in Ontario, very few issues. Nice. I haven't gotten into the old age home stuff, but I have heard the margins can be juicy on the markups. So like hair appointments, certain little extras you can add to things as well. Rent to rent, cool. I haven't heard of them, but it sounds cool. Or I've heard of them, but I haven't dove deep into them. Patel says, hello, is this market good for buying houses in Waterloo area? It depends. I mean, it is pretty slow right now in London, Kitchener, that kind of thing. So potentially, yeah, actually it's not a bad time. The summer lull, it may get worse into the fall and the winter. So if you're looking, take your time, run your numbers. You're not in a rush. It's not going to rip up 10% anytime soon. In this interest rate environment, we are not going to have a huge appreciation spike. So take your time, analyze the deals. It's not gonna run away from you. There'll be another one that comes that's just as good. There's gonna be no major appreciation in the next 6 months in real estate. So you can chill for a bit, but yeah, get out there and hunt. There'll be lots of opportunities, lots of them. Yeah, student rentals can be higher cash flow for sure. That's how I got started in rentals. Is I started with the student rentals. They're more work, but they're definitely more cash flow. Your dollars per hour are okay. Steven says, hi Mike, do you have a set point into your head how long you'll keep your short position? Is there a quitting point for you? Steven, yeah, so I I had tentatively set the end of the year when I put it on in February. So by the end of the year, if I hadn't seen any action or anything that was, heading in the right direction, that I would begin to cut the position in quarters. So I would take a quarter off, then another quarter, another quarter, another quarter into the spring of next year. But I could be wrong, but like I'm fairly confident we're going to have some negative catalysts coming into this fall, and that's all I'll need to unwind. But again, I could be wrong, and that's why we position size. We don't put our entire portfolios into a short. This has been a lesson for me too. Like I even got overexposed. I shorted too much with all my available cash, and now I have to sell some properties off to generate cash because I have loans out that people aren't paying off. The mortgage comes due and they're like, oh, I can't pay you back right now. It's like this and that. So liquidity has been a challenge right now, even for myself, because I'm refusing to close out that $4 million short that I have on, $3.8 million short that I have on, because it's like, look, I don't want to lock in that loss right now. I'm going to wait until time is right. When there's massive fear, a little bit of fear in the market, I will begin to unwind some of that and generate some liquidity. But yeah, so I have a couple of properties that I'm putting up for sale. Part of that is strategy. Like they're as good as they're going to be for me. I don't plan to add any more value to them. And I'm like, I might as well sell them. I can go buy another project that's 70 cents on the dollar and I'll be better off redeploying that capital. So part of it is strategic for me. Part of it is like my dad lives in one of them and he needs to leave and get into his own house. Part of it is just I have a rental that I was fighting the city on for a year and a half. I finally closed the permit off. I'm all good. There's a number of reasons why we have, and a bunch of flips that are finishing too, which I have no intention to hold for the long term. So I would dispose of those too. But anyway, that's the whole stream, I guess, for today. Thank you everyone for tuning in. I really appreciate it. All the questions. And for anyone watching the replay, hit the like button. If you're watching it live right now, hit that like button. Share it around if you got some value here. Say, hey, that would just, tell a friend. Sharing your social media. Tag me in it at Mike Rosehart on social media, on Instagram or Facebook. It'd be cool to tag me. I would love it if people would share my stuff. It's been a long time since people shared any of my live streams. I might go back to making content, like typical 5 to 10 minute videos that are more digestible, but we'll see. Anyway, guys, appreciate everyone for tuning in tonight, and I will see you guys next week. Live every Wednesday, 7 to 8 p.m. Standard Eastern Time. You guys know where to find me on Instagram, Mike Rosehart. And the secret to unlocking your wealth for you. It's 3 levers and control your financial future. I've said this 1,000 times now, but spend less, earn more, and maximize returns in the difference. That's it. Those are the 3 levers to control your financial future. And I hope that you guys can put them into use and unlock financial freedom for yourself, because it is the best thing. It's better than a Lambo, better than a nice house, is the ability to never have to work again for the rest of your life if you don't want to. But we work anyway because it's the kind of people we are. Anyone who can unlock that type of achievement tends to be someone who wants to work anyway. All right, guys, we'll see you next week. Bye.